Have you ever stopped to think about the invisible skeleton of the modern world?
What do you mean by that?
I mean, really look around you. You see the planes, the construction cranes, the factories, but what actually makes them move? What connects the brain of the machine to the muscle?
It's a great question. We usually just see the finished product, the shiny Boeing jet or the massive Caterpillar excavator.
Yeah.
We rarely think about the hydraulic veins, the pneumatic nerves, the filtration systems that keep them from seizing up.
Exactly. And that is why today we are looking at one of those hidden giants. We are talking about Parker-Hannifin.
hmm
And look, I know what you're thinking. Oh, great, a deep dive on an industrial parts manufacturer.
Right. Are we going to talk about lug nuts for 20 minutes?
Exactly, but hold on, because this isn't just about widgets.
Not at all. In fact, if you look at the deep dive we've prepared, which is centered on their Q2 2026 earnings report that just dropped,
On Thursday, January 29th.
right, you'll see a company that is fundamentally changing its DNA.
It really is. They're becoming this connective tissue of the global economy. And the numbers, they are honestly eye-popping.
It was a very, very strong report across the board.
For a 100-year-old company, yeah.
Sales hit a record $5.2 billion for the quarter. Adjusted earnings per share jumped 17% to $7.65.
And they beat expectations significantly,
They really did.
which is wild. You usually expect this kind of growth from a tech startup, not a centenarian industrial manufacturer. So our mission for this deep dive is pretty clear.
Yeah, how are they doing this?
How are they doing this? How does a company that makes hoses and valves manage to put up margins that, well, that would make a software company jealous?
It comes down to a few key pillars we found in the source material. It's about this business system they call the WIN strategy,
Okay.
a massive structural boom in their aerospace division, and a very strategic new acquisition that tells us a lot about where they're heading.
Okay, let's unpack this. I want to start with that win strategy. It sounds a bit like corporate buzzword bingo, doesn't it?
It does, the WIN strategy. But based on the transcript from the earnings call, this isn't just a poster on the wall.
No.
No, it's the operating system of the entire company. CEO Jenny Parmentier and CFO Todd Leon-Bruno, they reference it constantly. It's the engine.
And the proof is in the margins.
Absolutely. The proof is in the margins.
Right, I saw that. Adjusted segment operating margin expanded to a record 27.1%.
Which is an increase of 150 basis points from last year. And to put that in perspective, for an industrial manufacturer, breaking that 27% barrier is huge.
That's a massive move on a $5 billion sales base.
Incredible effort. But what's really fascinating here is the concept of incrementals that the CFO highlighted.
Yeah, I wanted to drill down into that. They mentioned 40% incremental margins for the full year. For you listening, what does that actually mean?
It's a crucial concept.
Yeah.
So imagine you run a lemonade stand.
Okay, with you.
You've already paid for the stand, the pitcher, the sign.
Yeah.
Those are your fixed costs.
Got it.
Now, you sell one extra cup of lemonade. That new sale brings in $1. But because your fixed costs are already covered, you only have to pay for the lemons and sugar for that specific cup.
So if the ingredients cost 60 cents.
You keep 40 cents of profit.
Oh,
That's a 40% incremental margin.
I see. So Parker is saying that for every new valve or actuator they sell right now,
Every new dollar of sales.
they are keeping 40 cents of every dollar as pure profit.
Precisely. And in the industrial world, that is a stunningly high number. It implies they aren't adding a ton of fixed costs to generate that new revenue.
They're just working smarter, not harder.
That's a great way to put it. They're leveraging what they already have.
But isn't there a risk there? If you squeeze efficiency that hard, don't things start to break? I mean, I worry about safety or quality slipping.
That's a very valid concern, and it's something investors watch like a hawk. But interestingly, CEO Jenny Parmentier, she opened the call by highlighting their safety metrics.
Oh, really?
Yeah. They achieved top quartile safety performance with an 8% reduction in recordable incidents.
So they're actually getting safer while they get more efficient.
Exactly. And in heavy manufacturing, safety is often a proxy for operational excellence. If your incidents are down, it means your lines are running smoothly.
Your people are focused.
Right. It suggests the efficiency isn't coming from cutting corners. It's coming from refining the process.
So the internal machine is running smoothly. But what is that machine actually producing? Because the star of this report was definitely aerospace.
Absolutely. If we connect this to the bigger picture, Aerospace Systems is the rocket ship propelling this whole quarter.
Rocket ship is right. Sales hit a record $1.7 billion. That's up 14.5%.
And the organic growth, which strips out currency and acquisitions, was 13.5%. But here's the number that really it jumped off the page for me.
The margins.
The margins in aerospace broke the 30% barrier. They hit 30.2%.
That is massive, 30% operating margin. We know the big plane makers like Boeing and Airbus are notorious for squeezing their suppliers. How are they doing that?
It comes down to the mix. You have to differentiate between OEM, original equipment manufacturer, which is building new planes, and the aftermarket.
Aftermarket, spares and repairs.
Exactly. And that's the golden goose. You have a global fleet of aging aircraft. They're flying more hours. Travel demand is high.
So they need maintenance. They need parts.
And Parker's supplying those critical regulated components.
It's kind of like the razor and blades model, isn't it? The plane is the razor, but the hydraulic actuator is the blade.
A very expensive high-margin blade that you can't just swap in with a generic part.
So where is the growth coming from specifically? New planes? Old planes?
Both engines are firing. Commercial OEM sales are up roughly 20%, reflecting the production ramp-up, but the commercial aftermarket is up 17%.
And that's where the pricing power is.
That's where it really lives. When an airline has a jet on the tarmac, they're not haggling over the price of a fuel pump. They just need the part.
And looking forward, it doesn't seem like a short-term blip. They reported a record backlog in aerospace, $8 billion.
An $8 billion backlog. It's a staggering number. That's work already won, just waiting to be delivered. Orders are up 14%. This trend has legs for years.
Okay, so aerospace is booming, but Parker is a diversified industrial company. What about the other side, the dirt-moving stuff?
This is where the story gets really nuanced and, frankly, quite interesting for anyone tracking the global economy. For a while, parts of this segment have been in a slump.
High interest rates.
Exactly. But there was a key aha moment in this report regarding the off-highway market.
Right, off-highway. Your mining trucks, your excavators, anything with big tires.
That's it. They raised their guidance for off-highway from neutral to positive low single digit.
Okay, positive low single digit sounds small. Why is that a big deal?
It signals the turn. If you've been flat, flipping to positive is a major indicator that the cycle is bottoming out and starting to climb again.
And what's driving that?
They noted strength in construction and mining.
Well, mining makes sense. The push for electrification, batteries, data centers, that all requires copper, lithium.
You need massive machines to get that out of the ground. Precisely. Agriculture is still a bit under pressure, but mining is picking up the slack.
And what about geographically? Did the numbers reflect that classic U.S. good, Europe bad story?
The regional breakdown was surprisingly positive. It sort of bucked that trend. North America had about 2.5% organic growth.
Driven by aerospace.
Yep. But the surprise performer was international. Sales were up 12% reported.
Wow.
And even organically, it was up 4.6%. But the real headline there is Europe. For a long time, Europe has been a drag. In this quarter, Parker saw Europe turn positive.
2% growth. That is a surprise.
It is. And Asia-Pacific was strong, up 9%, driven heavily by electronics and semiconductor demand.
Ah, so there's the tech angle again. It's not just building roads, it's building the chips that go into our computers.
Which brings us back to that phrase Jenny Parmentier used. Interconnected technologies. They aren't just selling widgets anymore. They're selling integrated systems. You need ultra-pure filtration and fluid handling to make microchips, and Parker provides that.
And now they're looking to add even more to that portfolio. Let's talk about the big news from the quarter, the acquisition.
Right. They announced they are buying the Filtration Group Corporation.
This is a classic Parker move, isn't it?
It is. They aren't just buying revenue to get bigger. They're buying quality revenue.
What makes it quality? It's just selling more filters, right?
But think about the business model. Filters get dirty. They have to be replaced.
It's recurring revenue.
Exactly. It's stable. If the economy crashes, you might not buy a new factory machine. But you still have to replace the filters on the machines you have. It makes the business less cyclical.
It's like buying a house that already has a paying tenant. You get rent checks from day one.
That's a great analogy.
Yeah.
And this acquisition expands their presence in life sciences, HVAC, industrial filtration. But crucially, it increases their aftermarket sales in the filtration segment by 500 basis points.
That's a significant jump in stability, and I assume they plan to use that win strategy on the new purchase.
Oh, absolutely. They plan to capture $220 million in cost synergies within 3 years.
So, sticking with the house analogy, it's like buying the house with the tenant, but then realizing you can also lower the utility bills because you own the whole neighborhood.
That's a perfect way to put it. They leveraged their scale to squeeze more profit out of the new company than the previous owners could.
So let's zoom out. Record margins, booming aerospace, recovering industrial, a smart acquisition. What does the future look like?
Well, this raises an important point. The CFO pointed out a fascinating metric. Orders are outpacing sales.
Wait, explain that. If I sell a burger, that's a sale. What's an order?
An order is a commitment to buy in the future. So sales were up, but orders were up even more, plus 9%.
Which means their backlog grew.
It grew to a record $11.7 billion.
That is a massive safety net. $11.7 billion of guaranteed future work.
Well, mostly guaranteed. But yes, it signals a shift to a longer cycle business. Historically, these companies lived and died by short-term demand.
And now they have visibility.
They have visibility stretching months, even years into the future. It helps them plan, manage costs, and weather economic storms much better.
So, based on all this, they raised the bar for the rest of 2026.
They did. Because of this strong Q2 and that backlog, they raised the full-year outlook. Organic growth raised to a midpoint of 5%, adjusted EPS to a midpoint of $30.70.
$30.70 per share. That is serious earnings power. What about cash?
Cash is king. They raised their free cash flow expectation to about $3.5 billion. And here's a metric that highlights the quality. They expect free cash flow conversion to be greater than 100%.
Okay, I always trip over this one. How can you have more cash flow than you have net income?
It involves non-cash expenses like depreciation. Those are accounting charges that lower your net income on paper.
For tax purposes.
Right. But they don't actually take cash out of the bank account. So their actual cash generation, the money they can use to pay dividends or buy back stock, is actually higher than their reported profit.
It's incredible. The quality of earnings is pristine. You know, when we started this deep dive, we talked about Parker as this old industrial giant, but it feels different now.
It does. And that brings us to the provocative thought for you, the listener. We categorize stocks in these neat little boxes: industrial, tech, consumer.
Right, grease and gears.
But with aerospace taking up such a huge chunk of the profit pool, with over 30% margins, and with this pushed into life sciences, does Parker-Hannifin still count as a traditional industrial stock?
That is a really interesting way to look at it. If you have a company growing earnings at 17%, with tech-like margins in major segments and a multi-year backlog, maybe investors need a different lens.
It's certainly behaving less like a cyclical factory stock that crashes every time the economy sneezes.
And more like a resilient, high-margin technology provider.
Exactly. They've dampened the volatility. They're becoming something closer to an industrial utility essential, reliable, and just compounding.
Less boom and bust, more steady climb. I think the biggest takeaway for me is just the sheer scale of their integration into everything. You can't really bet against Parker without betting against the global economy itself.
That's a fair assessment. Think about it. If planes are flying, Parker gets paid. If buildings are being cooled, Parker gets paid. If chips are being made for AI, Parker gets paid.
And if the Earth is being moved to mine for batteries,
Parker gets paid. And thanks to the win strategy, they are getting paid with better margins on every single one of those transactions than ever before.
It's a machine that builds machines, but the machine itself is just so finely tuned.
And it's getting bigger. The Filtration Group integration is the next chapter to watch.
Based on this quarter, I wouldn't bet against them.
Neither would I. The data suggests they have the formula figured out.
Oh, there you have it. Not just hidden pipes and hoses, but a high-tech, high-margin, aerospace-driven juggernaut hiding in plain sight.
It's definitely one to watch.
So next time you're boarding a flight, look for that Parker logo. Chances are it's there, doing the heavy lifting while the rest of the world just keeps moving.
It's the connective tissue of the modern world.
Thanks for diving deep with us today. We'll catch you on the next one.